I always tell people it's a melting pot of different factors that is causing this insurance increase. But also, I've seen now that these lenders are requiring, it's called excess liability. So it's your coverage over your general liability, or umbrella, essentially.
Welcome to the Cash Flow Chronicles. I'm your host, Jonny and the founder of Cattani Capital Group. For the last 2 years, I've been studying alternative assets and now help solve the problem of creating passive cash flow for creators, influencers, and busy professionals by bringing you 5 episodes a week of easy to understand education in the world of passive investing. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani, and I'm joined today by Jared Whitinger. Jared was born and raised in Northeast Iowa. He's been around real estate for most of his life with his dad, his brothers, and a partner buying multifamily complexes in Iowa. He was able to see the business from an early age, eventually became a leasing agent through college and worked as property management full-time after college. He's invested passively in 2 multifamily syndications as of 8 months in Austin, Texas. He's been working in real estate insurance for over 2 years, specializing in any type of real estate asset directly with owners, helping them to underwrite for the correct costs, finding them the correct coverages and pricing options for them to meet their lender's requirements. Jared, welcome to the show.
Thanks for having me.
Absolutely. Stoked to have you. Great conversation today because you kind of mentioned offline, just want to shed some light on the world of insurance, which, you know, a lot of new investors listening to this podcast, passive investors who may not understand that insurance is still a thing, even in this big, huge commercial world. Mm-hmm. But before we get into kind of the weeds there, we've kind of alluded here, you've been around the industry for a long time, makes sense you went into it. What's some of your earliest memories of kind of getting into it and what kind of hooked you, because not everybody kind of follows the family business or, in that sense. So what kind of hooked you about real estate and kept you in it all these years?
Yeah. So from an early age, it was my dad just dropping tiny little seeds of, hey, I'm going to go check out this property. I'm going to this property today. We're working on this one. And at the time, it was very new to me. I was very, very green. So it didn't really make sense to me. Like, you own this property that people live in. And then I started putting 2 and 2 together. He started introducing me to Rich Dad, Poor Dad. He threw that book to me. I read that book and it the light bulb went off. And then just being able to be exposed to that stuff from an early age, seeing those properties was, just super grateful and awesome to see that side of the business. And then he showed me Rod Cleave's podcast, and then I dove into that. And then being on the leasing agent side, being able to learn the business from that end was also a really great experience. And just being able to manage residents and the properties as a whole was awesome. And now it leads right into what I do today, which is insurance.
That's awesome. I love it. Yeah, it's pretty powerful when that light bulb goes off. And of course, I'm exact same. The light bulb for me was, of course, the Purple Bible, Rich Dad, Poor Dad. I think, now doing close to 250 episodes, I can confidently say that 95% of my guests can kind of, find that origin for this industry. So I love it. So let's kind of get into it now, right? The world of insurance, not talked about that often, not exactly the sexy part of the industry, but definitely a necessary part. So first, let's start kind of high level. Explain what it is you do and kind of the world of insurance for commercial real estate, and then we can go deeper.
Yeah. So I basically, my position, I am selling you and your property to the insurance carrier. So all that info, all those questions, I go back to the carrier and I say, this is what Jonathan is doing with this property. What can we get for pricing? And then, we go back, get most competitive quotes, obviously, whatever. But then it's property coverage, which is the actual coverage on the property, and any items as far as computers and all that stuff, and like leasing offices, and then general liability, excess liability, in the event of a lawsuit to the property or the entity, and then some flood insurance. And it can be very complex, depending on the deal size you do. If you're getting into properties that are 25, 30, 35 million, these lenders start requiring different things. And it takes an agent who specializes in real estate to know how to navigate the different nuances that come with that, and with what the carriers are coming back with as well. So what I always recommend is, if you're gonna go get your teeth done, you go to the dentist. You're not going to the eye doctor to get your teeth done. So if you're
hopefully not.
Yeah. If you're buying an apartment complex, find someone who does insurance for real estate. That's not to say your personal home and auto agent cannot do that, because they definitely can. It's just there's different nuances in the real estate aspect that if an agent's not in the game on a daily basis, it's tough to know sometimes on these bigger deals, or if a carrier comes back with something. So
are you taking underwriting to the lender? Like, I guess explain, right? So you mentioned in the beginning you're going to the lender and basically pitching the operator, but also essentially just trying to figure out what the lender's going to require in the way of insurance, right? And obviously, depending on the market and even the location inside that market is probably going to determine what kind of insurance you're going to need, right? Coastal areas, flooding, Houston comes to mind first thing. There's some areas in Houston you need flood insurance, and other areas in Houston you don't need it. So I guess then explain what that looks like. Some of those nuances, like you mentioned, that, you understand obviously better than if I'm just calling someone down at my local Geico shop.
So the thing with real estate insurance in these properties is that the lender actually controls the majority of what you, the owner, can do as far as insurance. These smaller deals, you do have a lot more flexibility, but the bigger 5, 10, 15 million plus deals, the lender controls a lot of the deductibles, the required coverages. So what we end up having to do as your agent is, the lender comes in with the insurance requirements. They're requiring flood insurance. And depending on the lender, typically, if a building is touching part of the flood zone, they're going to require it. But I've also ran into the flood zone doesn't actually touch the building. It just goes around it, but the lender still might require it. I come back with proof and say, hey, we have this flood map. We have this document that says it's not in the flood zone. We don't need flood insurance. And then that actually saves you guys some premium dollars. And, that helps out on your cash on cash, your overall returns, and all that good stuff. So that's one example, to keep a high level and not get too much in the weeds.
Yeah, well, let's get into the weeds. Let's talk about, obviously we talked about flood. It sounds like your ultimate goal is to get the best possible deal, right? Essentially the best possible outcome for your respective client. Is it very common? So I'm not on the operation side, but is it super common to use an insurance agent at that level, that 5, 10, $15 million level? Or do a lot of operators get to the point where they understand how it works and then they just negotiate themselves?
So that's kind of the thing with insurance is that I had to go take a test and I had to go get licensed. So I am licensed to sell in 10, 15 states or whatever. Myself and then as our company, we're licensed in all states. But typically, I'm working with a lot of people that are doing a 500,000 deal to a $45 million deal, $50 million, or like a portfolio. The only time I have seen someone bring in like an agent themselves is when they own a lot of properties, like, and it makes sense for them to bring someone in house. Otherwise, owners are going out to some agent who knows what they're doing with real estate.
Got it. Okay. That makes sense. Awesome. Okay, cool. So I appreciate that insight there. I know that was still a very high level question, but yeah, so now let's get into kind of some of the nuances, right? We mentioned in the intro, obviously, you know how to underwrite, right? It's super important for you to understand that because you're talking to the lenders, you're also talking to the operators. You need to know the numbers, make sure they make sense.
Yep.
So kind of get into some of the nuances and some of the details in terms of, maybe what you're seeing today, like, costs are obviously going up all across the board. So kind of touch on some of that stuff.
Yeah, so I always tell people it's a melting pot of different factors that is causing this insurance increase. But also, I've seen now that these lenders are requiring, it's called excess liability. So it's your coverage over your general liability, or umbrella, essentially. But I've seen as low as $2 million for like Fannie and Freddie loans. And now on these bigger deals, I've seen it start at like 15 million. Well, that's a huge gap. And that's a lot of added premium. So if you're going after this deal that you have Fannie and Freddie, you might be talking an extra 10, 15, $20,000 in premium. And if you don't account for that, you're under contract, you're about to close, and then that pricing comes in. Like that's where it hurts underwriting from what I see a lot of the times is people just not expecting, I guess, the right cost, because every insurance quote is different in its own sense. So the lender requiring more coverages, that's going to tack on some additional premium. And then also lost my train of thought. I would say I always tell people underwrite for worst case scenario as well. Because typically if you get this, the OM from the broker and it says we can expect $400 a unit for insurance on whatever, this 100 unit apartment complex, Houston, Texas. Not saying they don't know what they're doing, but I wouldn't trust that, or I would go as far as not necessarily going off of the T12, because they could have got their insurance in place last year, and last year is a lot different compared to now. So if you're underwriting for like a $50 a unit difference, and then your pricing comes in way higher than that, well, now you might be stuck with a deal that's not a good deal. Gets into a sticky situation.
Yeah, that makes total sense. Is in order to sort of, really understand this and be able to underwrite for it, like you said, underwriting for worst case scenario, is there a rule of thumb, like insurance is typically going to be, 3 to 5% of the acquisition costs, or, something like that?
Unfortunately, it's doesn't work in that sense, but it is based on, I would say, the area. So a property in Houston compared to a similar property in Austin can be very, very different pricing. There's factors that go into it that can fluctuate them, but on a general basis, Houston is going to be a lot more expensive than Austin, San Antonio, or West Texas.
Interesting.
Yeah, and then Florida is horrible. And then if we're talking like the Midwest, you could probably cut it in half compared to Florida or Texas.
Interesting. Okay. So it's strictly based off of what, like, worst case scenario for, obviously, right? So the markets you mentioned, obviously, clearly in flood zones, right? A lot of water being involved, which water damage is the most potent damage pretty much there is. I mean, of course, if a tornado comes in and rips it apart, there is that. But okay, so that makes perfect sense then, as to kind of the nuances and the things depending on the area, as well as why it's important to understand what zones you're in and whether or not that's going to apply, because that could, like you said, that could kill a deal right from the start if you're in a flood zone and you can't, even despite your most conservative underwriting, can't account for that insurance. So what are you seeing changing? We talked about, obviously, kind of a melting pot of things for the price increase. Obviously, economically, things are changing in terms of interest rates going up. What is anything changing aside from price in the world of insurance that you're seeing?
Outside of pricing, I would say it's the carriers are becoming more strict in their guidelines or what they want to go offer insurance on is changing, and it's changing drastically since even like 6 to 12 months ago. So these insurance carriers that over the past few years wanted to offer insurance on these 1970s, 1980s, even 1990s type of, let's say, multifamily assets. Now they're switching to, we're not going to offer insurance on anything older than a 2000 build or a sprinkler, or we're not doing anything in Texas. And it's tough right now because of that. So a lot of these carriers are not only getting hit hard as far as the melting pot of different factors, but a lot of them are exiting out of the real estate space to offer insurance on. If they're still in the game, they're taking everything with a fine-tooth comb, and they're making sure that they touch every single base that they can, cross their T's, dot their I's, to make sure that they're not missing anything, because a disaster like Hurricane Ian comes through Florida and even Georgia and now Kentucky, Carolinas, and it just wreaks havoc. And now they're having to pay a lot of claims, damages, all that sort of stuff. But so yeah, it's just they ask more questions. They require a lot more info. And if you don't have that info ready to go up front, it is kind of harder to go to the carrier and be like, hey, can we get to this pricing? Because if you don't have your bases covered as far as some info, if you have a property A and property B, property A doesn't have the info, property B does, they're going to take their chances on property B. Because that owner has everything in place. They're showing the carrier like, hey, this is what we're doing. We're property A is like, hey, let's go find insurance and see what happens. So
Interesting. Okay. Wow. So some leaving the real estate game altogether, which is fascinating. But obviously, there are other things out there, I guess, that you can insure. So we obviously talked about making sure you have everything ready to go. What other, moving forward, if it is going to get, tighter and more challenging, on top of, the ever-changing economic world that we're all trying to navigate now, what are some more tips you can give to those, who will have to go out for insurance to kind of make sure that, they're able to get it going?
yeah, some tips. I always say, like I said, worst case scenario. So play with the insurance pricing on your underwriting. And then if you're looking at a deal that you think is going to be under contract or you're close, best and final, reach out to an insurance agent. Be like, hey, what's your thoughts on this? Here's the info I have. And what I'll do is, if I can't get you at least an indication or like, hey, this is rough pricing before we go finalize it, this is what the carrier is going to ask for. And that's some info you want to go back, either ask the broker that you're working with or the owner. Because then depending on the roof ages, a lot of the times, if the roofs are super old, carriers are going to come down and offer less coverage, which then doesn't meet the insurance requirements from the lender. And then they don't want that quote or the pricing or that specific coverage. So then that's info that needs to be tracked down. And if you're tracking it down 2 days before closing, it gets dicey. So I always say, like, reach out to me. Best I can do is I'll come back with questions and show you, like, hey, go back to the seller or the broker and make sure you have these things in line, as well as underwriting.
Awesome. I love that. Yeah, I appreciate that insight. I know, again, that's kind of one of the nuances that we don't really talk about, but obviously very necessary. So important to have all those ducks in a row. Well, this has been incredible, Jared. I appreciate all of your insight into the world of insurance. I know how important it is, right? And I've seen it kill deals before. So always good to get the insider perspective. So we'll go ahead and wind down here. We'll jump to the final five. First question: best advice you've gotten from a mentor?
Ooh, best advice. I would say don't think about it too much. Just take action.
I love it. That's one of my favorite pieces of advice. Take action.
It's, you can sit around and business plan all day, strategize, but if you're not in the game, making moves, that business plan you can throw out the window.
Absolutely. Couldn't agree more. What is about your career that makes you feel like you're fulfilling your why?
Oh, that's a great question. I mean, geez, ever since I was like in high school, I've always I just enjoy helping people, but then also I get to talk about real estate every day, and then I help investors with their deals. So, I mean, just being able to help investors is my why, and just enjoyed talking to people, solving problems, and helping them where I can to help them close deals.
I love it. That's awesome. Yeah, I know how that goes. I could talk about this all day long. I pretty much do, and am still not sick of it. So I get that for sure. Favorite non-real estate or investment related book?
Non-real estate. So it's two of them. It's Tim Grover he's Michael Jordan, Kobe Bryant's trainer. It's Relentless, And then he came out with another one called Winning. Those are probably two of my favorite books of all time.
I love it. Yeah, I've gotten Relentless actually a few times, so that one's on my list. Definitely gonna add it. Awesome. If you could have any superpower, what would it be?
Ooh, probably the ability to teleport.
Nice.
I don't like flying or driving.
Yeah, some kind of travel. Mine would be flying, but some kind of way to travel faster. Teleport would be incredible.
Yeah.
Awesome. I love it. Cool. Last one. What's the best way for people to get a hold of you and learn more?
Best way is cell phone. You can call me, text me, pretty much. I don't want to say anytime, but generally time. And
During
then
typical business hours.
yeah.
Love it.
Don't call me at midnight, please. Cell phone, email. I'm on social media, Facebook, LinkedIn, Instagram. So
Cool.
Instagram, Facebook, it's just my name, first name, last name. And then do you have my email or cell phone, or I don't know if it was in my bio?
Yeah, if you want to say it, if you're okay with saying it, we can. If not, we'll just link it in the show notes. Either
Yeah.
way.
Cell phone 641-426-6869. And then my email is kind of long. So it's my first name, Jared, period, WHITINGER at peoples with an S, and then the horizontal dash insurance.com.
Wow.
Yeah.
And just for the record, everyone, it's Whitinger, not Whittinger. So just want everyone to know that. Cool. Yes, that is a long one. We're not going to try to make you guys write that down. That will be linked in the show notes. We'll make it super easy. Jared, thank you so much for your time. This was awesome.
Yeah, I appreciate it, Jonathan. Thanks,
Absolutely.
man.
Absolutely. Thank you again for tuning in. Who do you know that wants more cash flow? Share this episode with them so you can grow your cash flow together. If you enjoyed the show, make sure you're subscribed on your platform of choice so you never miss a new episode. Go to CataniCapitalGroup.com to learn more.